Hi guys, and welcome to another video. Today's video, it's gonna be about the stock market. So it's gonna be about a misconception about the stock markets. A lot of people, they're thinking that the stock market can generate a lot of money. That's true, but it's also not true. So I'm gonna discuss this thing about you. I'm gonna show you the graphs and how much money actually was generating from the stock market, and I'm gonna show you the history that proves for you guys the amount of money that you can generate from the stock market. So if you are new to the channel, of course, make sure to hit the subscribe button. My channel is all about how to make money online, how to save money, and how to manage the money that you already have so that you'll not end up losing it on some worthless stuff. So as you can see, guys, beautiful wallpaper as always. Do more, guys. Don't be lazy. Try to use your time effectively. We only live once, so we must do something in order to achieve a objective a day. So every day it's better to do something instead of just wasting time and spending money for nothing. So why not work a little bit more so you will achieve your goals on the future. So let's just start the video. I will start by Sarwa. As you guys know, Sarwa is actually investing your money in the stock market. I had a question in my channel. One guy asked me if he can invest $500 and can generate $150 profit every month. The answer is absolutely not, because the amount of money that you are investing doesn't allow you to get that amount of profit. And also, the stock market doesn't guarantee you will earn money every time. So maybe you will have bad days. Maybe this month you will have a good month. You will might end up like profiting more. Maybe you will have a negative month, so you will end up actually losing money. So you cannot make Sarwa or the stock market in general as your own income, or like the own source of money, like source of money to live. This kind of investing is working for the long term. You invest some money and you keep actually investing. You don't take money out from this platform or from the stock market, but actually you keep the money in the stock market and you keep adding, and this is called dollar cost averaging. So whenever the price is going down in the stock market, you end up buying more and buying the dip, and that's actually what's generating the money. Because after all, as you can see, the stock market is always going up. This is QQQ. This ETF tracks the largest companies in the USA. So this one, and also VTI as well. So you can say it's quite similar, the graph. But definitely, if you keep zooming into the graph, you will see that the trend is not going in a perfect line. It's always having this kind of drops. You can see it's all small drops. This is like monthly drops. You cannot see it now because you are seeing a yearly trend. We always tend to see the trend from the bigger picture, like from the yearly perspective. But if you zoom in, if you do like a monthly one, you will see and you will notice that the trend is always dropping. It has some bad months and it even had some bad years, like you can see here. This is the during the coronavirus, and you have also 2008. I cannot actually reach that. Maybe, yeah, I can reach it. As you can see, guys, there's a big drop here. I don't know what's the cause of it, but there is a big drop, and you can see this is the crash of 2008. It's a huge drop. So imagine if you invest your money at this period, you will end up like having almost 2 or 3 years to just reach the period where actually you invest that money. But imagine you are buying the dip. You are, even though you're losing money here, you're still generating and putting money into the stock market. So you still keep buying, keep buying, keep buying, and once it reaches here, it's still going up. It starts to go up, and then of course you're still buying and buying and buying. And once you reach this amount, your total price will not be at this period because you're buying at a cheaper price. So probably it's gonna go down in this area. So you already passed the danger zone, and look how much money you could make. So as you can see, it was here in 63. So one share for 63, and now look where is it now, in 222. So that's a huge amount of gains, and even you can even make more, because during these crashes this is actually the period where you actually make a lot of money, because it's like you're buying something on a discount. It's very cheap, but of course it's gonna generate more profit for you. But definitely not every month you will have a good profit rate. So make sure that this stock market trading is strategy is for the long term. If you are a day trader, that's a different thing. I am not a day trader, so I cannot actually tell you what to do. This is different. So if you are a day trader, maybe you can get that amount of profit. But if you are a day trader, you have to spend all of your time into the trading and the stock market, and that's really tough because you actually make it your own job, and you end up actually watching this graphs and the news and all the details about the stock markets and the economy and all of this stuff. So basically, it becomes your obsession and your job. And definitely, you cannot have a social life or another job. This is really difficult. And if you're willing to do that, I'm perfectly fine with it. You can go and study hard and do your best. But this is really stressful technique if you want to do that. So I highly recommend to go for a long term trading, and you cannot even have a look at the chart. You don't have to look at this stuff. You don't have to check the chart daily. You don't have to log in even to your accounts in Sarwa. You can do like a habit of checking your account monthly or once every 2 or 3 months, and you'll see that the amount of money is growing in a very good direction. So that's what I want to say, and I want to show you guys the graph and the historical annual return of the S&P 500. S&P 500 represents the most largest companies in the USA. So these companies actually are the ones who drives the economy of the USA, and they drive the stock market. So this is basically the index that you want to check to see the return, the yearly return of your investments. So I'm going to show you guys, this is 20 years, and each year it's gonna start by 2002, and you can see 2002, it was not a good year in the stock market. There was a loss of 23% of the amount of investment. This is starting from January. This is a full year. So if you invest your money in January 2002, you'd be losing 23, almost 24% of your money at that year. But look at the next year. So imagine at this time, even though the stock market is going down, you're still buying more shares, you're still putting more money into the stock market. You are committed. You know your goals is for the long term. You don't care about the price fluctuation, so you don't care about these small details. So your goal is for the long term. Look what happened. There is 26% gain. So this one, if you don't put any money here, if you just bought in January and you don't put any money on it, you will not gain a lot, because it's gonna come back actually to its initial price, because here you lost 23 and now you gain 26. So actually you didn't gain a lot, but if you keep buying into this dip, you will gain a lot of money. The following year it was average like 9%, then less 3. You can see 13%, 3.5%. This is the 2008 crash that I show you in the trend. You can see it's 38. It was a huge loss. But once you go and buy and you don't care about the crash or anything, look out about the following years. It's all green. It's even this one 29%. You can see all of these ones. Now only you have this small 2 years of loss, and the rest is just green, green, green. You can have here a full details of the S&P 500 index, and this is the returns that this index brought to their investors. So that's it, guys. Thank you very much for watching, and I will see you in the next video. If you have any questions, make sure to write them in the comment below section, and I will be super happy to answer you all. Guys, make sure also to sign up using my link, because you will gain $50 profit as a welcome bonus, and you don't have to do anything. You have to just sign up with my link. If you sign up with the website directly, unfortunately you will not get your free $50, and you only can deposit $5 in order to get this reward. Thank you, guys, and I'll see you in the next video. Have a nice